activity to manage inventory and eliminate bottlenecks. This demo from SK Telecom is a 5G connected factory, which really illustrates how 5G will be able to help industry.
Everybody, the Fed kicking off a two-day meeting, and with employment and economic growth humming along, how will the central bank respond? Joining us right now is Dwight Scott. He's Blackstone's Senior Managing Director and President of GSO, which is Blackstone's credit arm. And Dwight, thanks for being here.
Glad to be here. Thank you for having me.
So the Fed has been one of the, probably the most important factor in the markets for years at this point. But now that they've really gone much more dovish since December and the beginning of this year, how big of a role do you think they play at this point?
Well, in my world, the credit world, we were 9 months ago very defensive. We were very concerned about rising rates and what it would do to the economy and what it would do to credit. And with the move by the Fed in March and then again later in the year and likely what's going to come out over the next couple of days, it really puts a good base under the credit markets and allows us to be a little more aggressive. Meaning what? Meaning if the Fed's most concerned about growth in the economy and lack of inflation, that's a very good background for credit if you're a lender or a borrower.
I guess meaning what in terms of being aggressive? What does that mean you do?
Meaning you can lean into credits. You can provide a little more leverage to companies. You can be a little more aggressive as you grow your business. Companies will be issuing more in this environment, I think, and allowing themselves to grow, to make acquisitions, maybe more activity on the buyout side. All
right, that's really interesting. One of the markets you focus in is energy, and we do have a big energy battle that's taking place right now with Anadarko. We've got two different companies that are kind of vying to see what they do with that. You think that's a result of this, or you think that's a result of other things that had already been there, higher energy prices?
You know, I would like to think the Fed could help energy. I'm not sure they can. Energy is a very difficult market right now, and what you're seeing with Anadarko is more the consolidation that you need to make that business work. With lower prices, less interest from the capital market. So energy was 13% of the S&P, represented 13% of the S&P in 2007.
Yeah.
Today it's 5%.
Right.
It's 20% of the energy names today in high yield trade at 1,000 basis points over Treasury. So 20%, that's versus a market that on average is 7%. So the energy is struggling right now, and it's both performance-related and capital-related. Markets have moved away from the energy companies. They do not want to give them capital. It's a very difficult place to make money.
In the credit cycle, though, do you think there's a bubble or not? I mean, there's been a lot of speculation about that. What do you think? Are we somewhere in this cycle where things are going to go up and then down, or how are you comfortable with that?
Well, Yellen used the bubble word, I don't know, 6 months ago about credit. I don't see a bubble in our market. So today, the news about Alphabet, if they lose $60 billion in market cap today, in the fourth quarter, we had a significant credit correction in loans. We lost 5% across the loan market. 5% across the loan market is $60 billion of value.
If we're going to be in this environment, we're just getting started here. And you know what Congress is doing today? They're going to talk about infrastructure. Why don't we MMT a couple of trillion in infrastructure right now, if this is the environment we're going to be in?
Right. Listen, right now we have the lowest defaults we've ever had in high yield and among the lowest in loans in the U.S. and Europe.
It sounds dangerous to me, though. If you go into the infrastructure spending thinking, you know, the good times are going to last forever, you might even use MMT. You might even say modern monetary theory. Let's do it. I mean, is that what you're proposing?
I'm not the right one to comment on MMT, but I will say, in our world, if you look at the thing that drives success in our investments is generally growth in these companies. We don't need significant growth. We just need the companies not to fail. We're lending at 50% loan to value, and so if the company maintains value, we're going to be fine. And so in a world where there's little inflation, low rates, good growth, economic growth may not be 3.2%, but it looks relatively robust.
We should be happy and not afraid of prosperity and success right now. So let's keep it going. All right.
Well, GSO is a very active participant in leverage loans. Talk a little bit about leverage, talk about covenants. What are you seeing in that area?
Well, the leveraged loan market has grown from an $800 billion market 10 years ago to a $1.2 trillion market. So significant growth in that market. It is still a $1.2 trillion market, so not a huge market. The high yield market is $1.5 trillion or so in the U.S. So the leveraged loan market's moved in that direction. It is a very attractive market for us because it is defensive. We're credit. So, Joe, despite the comments we were just having, we're always a little worried about the bottom falling out. It's the nature of our business.
Credit risk.
And so we worry. And so if we can be senior secured in the capital structure, which is where the leveraged loan market is, we can be floating rate, so we don't have to spend a lot of time worrying about the Fed turning and going in the other direction. And we can generally lend that money against an LBO where there's significant equity coming in below us. That feels like a pretty good place to be, and it doesn't feel toppy at this point.
Well, I mean, given the central bankers over the past 5 years, for you not to immediately say, yes, we're in a credit bubble, I mean, that's significant to me.
Well, once again, you know, 6 or 9 months ago, we were really thinking about defense. We were moving out of fixed income. We were worried about rates going up. We were worried about the economy starting to turn. But growth in earnings last year, so back to the leveraged loan market. In 2015, the average leveraged loan name had 7 times debt to cash flow leverage.
Okay.
Today, it's 5.5 times. And that delevering is not because the companies have paid down a lot of debt. It's because they've grown. And last year was a great earnings year. This year's starting off slow. But still, earnings helps us a lot. It allows these companies to look a lot stronger.
3%. You can't even underestimate the ripple effects of growth. No one's saying we're going to grow every year at 3%, but you can't underestimate it solves a lot of issues, government and private sector.
Well, and especially growth without cost pressure.
Right.
I mean, the combination of those two things are very strong. We hear a lot of, leveraged loan market.
Continues?
I don't know. I mean, I think that's what they're going to be talking about the next couple of days. They'll have better insight than we will, but it doesn't feel like those pressures are there.
Not until Stephen Moore gets on the board. Then they might have some real insight.
Hey, Dwight, thank you very much for coming in today.
Thank you for having me.
Really appreciate your time.
Thanks for being here.
Coming up, it's a busy, he's in studio too, so be a little nicer. Anyway, it's a busy day and a busy hour for corporate report cards. We're expecting results from GE, Eli Lilly, Merck, and Pfizer all before 7 a.m. Squawk Box coming right back.
As CEO of Interactive Brokers, my job is to execute your orders at the best price. We do not trade against your orders or sell them to others and pocket the money. We cut out the middleman. This year we have executed over 50 million stock orders at an average commission of $2.20. Bring your account to Interactive Brokers and keep the difference.
Tyler Matheson, Melissa Lee, Kelly Evans, Power Lunch, Tuesday to Saturday.
When it comes to China, what we've really seen, particularly in that first quarter, is strong growth in steel production. So last year, China produced a record 928 million tonnes of crude steel, and in the March quarter, we saw that up 9.9%. We've been expecting, based on discussions with our customers in China, that steel production will grow at around 3 to 4% this year.
Sri Lanka stands wounded after the Easter Sunday terror attacks.
It was a tragedy of massive proportions.
Can the central bank help counter any potential economic fallout?
We have intervened a little bit in the market to ensure that this shock does not disrupt the FX market.
Sri Lanka's central bank governor, Indrajit Kumarasamy, only on the next CNBC Conversation.
CNBC's Healthy Returns Conference is all about the biggest developments going on in medicine and the things that investors can use to make decisions about where to put their money.
The majority of innovation in the last 10 years has not come from the top 10 pharma.
We've got FDA Commissioner Scott Gottlieb.
There are things that we can do to make it easier for the generic companies.
Craig Venter, he's a genetics pioneer.
Preventative health care could save the economy trillions of dollars.
At CNBC, what we do is we follow the money. Healthcare is 18% of the U.S. economy, so it's a huge business story, but it's also deeply, deeply personal.
Reporting on the Federal Reserve is one of the pillars of CNBC's coverage.
You guys ready? Here we come. Let's get to Steve Leisman with the Fed decision.
Up by 1/4 point.
Put up the Dow. We're up 250.
Obviously, the market reacted to it.
Chairman Jerome Powell will hold his first news conference this afternoon.
Leisman gives the first question.
Where's your biggest concern here? Is it in overkill when it comes to rates? There's very little that moves the markets as consistently as the Federal Reserve does.
Give me Treasury.
I feel tremendous responsibility both to get my reporting right and to get my analysis right.
Welcome back to Squawk Box. San Francisco home prices, they are falling for the first time in 7 years. Listen to this. The median home price in the Bay Area dipped by 0.1% from the prior year to $830,000 and now breaks a streak of 83 straight months of increases. So I don't know what that says about where we are in the dot-com. If I say dot-com, am I aging myself?
A little bit.
But that's the concept. Anyway, coming up when we return, General Electric's quarterly report is expected in just a few minutes. It's not on Friday, it is today. And we're going to bring you the numbers and instant reaction and analysis. Squawk returns with that in just a moment.
Good morning, Mrs. Wong.
Good morning. Your favorite.
Thank you. Good morning, Mrs. Wong.
Good morning. Look what I made for you.
Thank you.
Mrs. Wong?
Help! Help!
Good thing your grandson was around when you had your fall, Mrs. Wong.
We rely on packaging every day. But with plastic in the spotlight, we explore the technologies aiming to keep it in our economy.
This type of process can handle virtually all plastics and is a very powerful tool for the waste industry.
And the innovations that could